So today we wanted to come on and talk about the opportunity we see in T-bills. But before we get into that video, first we would like to thank everybody who subscribed and liked all our videos. And thank you very much again for that. Let's get straight into the video. For those that follow our page right now, know that we're pretty bearish on the stock market due to the Federal Reserve raising interest rates, due to banks having lots of problems and some defaulting or going bankrupt at this time. We think that we could see a nice downfall in the stock market. So right now we're just waiting. We're just looking at good companies that we know we want to purchase when the market comes down to the prices that we like. But one opportunity we see right now is high grade government bonds, mainly T-bills. Some of these 4-week T-bills are paying up to 5.84%, depending on the auction date. And what we're going to try to do today is we're going to show you how to you can invest in these 4-week T-bills, whether it's through your brokerage or whether it's through TreasuryDirect. The reason why we like this opportunity in T-bills at this time is because, as you know, the government, they're backed by the government. But we believe this opportunity in these T-bills are paying so much higher than, let's say, the 1 year or the 2 year or even the 30 year is because a lot of it has to do with what we think is with the debt default, the conversation that's going on in Washington, D.C. at this time. We're willing to take this risk. We do not believe that in no way is the government, is the Congress or the Senate or the president is not going to do whatever they could possibly do not to default on their debt. We just don't believe that's going to happen. And even so, we're going to take advantage of this opportunity to be able to purchase these T-bills for 4 weeks at these higher prices. So the 2 ways that we talked about that you can purchase these T-bills is through your brokerage account like Schwab or E-Trade, and also through TreasuryDirect. There's benefits to both. The first one that we're going to cover is going through your brokerage account. As of right now, from our experience, they won't allow you to directly purchase Treasury bills, the 4-week Treasury bills, but they will let you purchase the 90-day Treasury bills. So what we do instead on Charles Schwab, we purchase CDs. They have a little bit a lower rate, which is, I'm sure, is how they make their margin on it. But we find out, instead of moving the money from one account to another, we go ahead and purchase 30-day or 4-week CDs. And what you can see right now from the page that I'm showing, the arrow is pointing to the maturity date, is the date that the bond matures, which would be August 22nd on these particular CDs, and the maturity date for the year is 5.2%. Okay, so the second way that we're going to talk about is how to purchase T-bills directly, and that's through TreasuryDirect. And we'll spend a little bit more time on this. The page that you're seeing right now is the initial login page that you see. And if you don't have an account, where you can see that arrow is pointing to, that's where you can start by opening up your account. It's a pretty easy process. We'll cover some, but like I said, it's pretty simple, so we won't go into too much detail, but we will highlight enough to help you through this process. So the current page that you see right now, these are the 3 steps that you need to take where each arrow is pointing to. All you got to do is complete these 3 stages, and what'll happen is that you'll get an email sending you what your username is going to be, and then you have to finish the process that way. So once you have completed your account and you're all signed up now, and now you're ready to buy bonds. So the first thing you want to do once you log into your account is you want to click on that Buy Direct tab that you see that we have marked right there. And then once you clicked on that tab that we have marked Buy Now, here's the page that you're going to see. You're going to see the short-term bills that we have marked. That's what we're going to focus on. That is your T-bills. But on this page, you can also see where you can buy other type of government bonds, where you have notes, which are 2 to 10 years. We have bonds, which are the regular bonds, which are normally 10 to 30 years. We also have tips. And then at one time, you can remember at one time when the Series I bonds, when inflation first started, there was a lot of talk and the noise about how people was buying I bonds. And that's where this page with Treasury Direct where you can actually go buy those I bonds that you could spend up to $15,000 per year and putting them in the I bond to help your funds and fight inflation. But again, we're going to focus on the T-bills that we have marked here. Once you click on that page that you marked T-bills, you're going to see a page that's similar to this that we have marked. It shows the 4-week T-bills, the 8-week T-bills, and it goes down all the way out a little bit further out to 1 year. But then we're still going to focus on the 4-week T-bills. And in this auction here that we participated in this auction, and the auction was going to take place on May 11th, and the issue date for these bonds was going to be May 16th. So these are the ones that we purchased. Also at the bottom of this page, you will see a line that says see last issue date. And on that see last issue date, you can click on that, and what you're able to see is you're able to see the last bond auction that they had, and you can see where the prices were going at for those bonds, which is going to be somewhat, you hope, similar to what you're getting. This page shows is the auction that took place May 11th. This page shows, if you remember, our issue date that we was going to be issued these bonds was May 16th. And so this one now, it shows the maturity date, which is the date that our bonds are going to expire. And I haven't said it already, one of the good things about with Treasury Direct, you really actually don't, you establish an account, but you really actually don't establish a new account. They actually, what you do is you link your Treasury Direct to your whatever checking or savings account that you want to direct it to, and they actually pull the money out of that account. Those bonds are issued to you, and then when they deposit the money back into your account when the maturity date expires, they actually issue it. They send the money to that account that you bought those bonds from. So that's something that I really like. You're really not establishing a new checking or savings account. You're just establishing a Treasury Direct, and they deal straight through an account that you already have with your whatever bank that you deal with. Also on this page, it'll show you the rate, the investment rate, which is the rate that your bonds were issued to you at. So we know that the annual percentage rate from our auction that expired on May 11th, and then we was issued those bonds on May 16th. Where this page is something that I wanted to cover, because with T-bills, unlike other government bonds where you're giving a interest payment maybe every 6 months, every a year, and then your bonds may expire at a certain time. With these, you're not really given a interest rate. What you do is you purchase the bonds at a lower price. So in this auction that we had here, the auction date was May 4th, the issue date was May 9th, the maturity date was June 6th. But as you can see in that last marking, the price per $100 on this particular bond, the person paid 99.545%. And so what we're going to do is we're going to round that up to 99.55 to kind of show you how you can come up with your annual percentage that you receive. So on this bond with the auction date of May 4th, 2023, and we get issued on May 9th, we're going to act as if we spent $1,000 on the bond on the auction date. So at the date of the auction, we actually spent $955 on these bonds, because we know on the maturity date, they're going to give us our $1,000. And the way that you calculate that, we would have received $45. So we know that we paid $955 for this bond. And so on maturity date, we're going to get $1,000 back in return. So that would have mean we would have earned on this bond purchase, when we got on maturity date, we would have earned $45. And to come up with your annual percentage rate, what you would do is you would multiply $45 by 13. Why 13? Because there's 52 weeks in a year, and we know these bonds are for 4 weeks. So what we do is we divide 52 by 4, which will give you 13 weeks. Which will give you 13, which means 13 weeks. And so then when we multiply 45 by 13, we'll get 585, which, because we know that it's to turn it into a percentage, we have to move the decimal points over 2 spaces, which will give us 5.85%. So that's how much we would have earned on this particular purchase, on this particular bond that we purchased on May 4th. I know there was a lot there. I hope this helped you. I did went over a lot of math, but they really give you the percentages that you earn, it's a lot simpler than what it looked. But I just wanted to make sure that you had a full understanding. But then again, I just want to reiterate the reason that we're purchasing these T-bills. We're using them, and why we're purchasing them in 4 weeks and only 4 week increments, because we're looking and waiting on the downturn in the stock market, and we're just utilizing these instruments, to make sure that we have a cash position, if and when our downturn come that we're looking for, that we can invest in common stocks.